Hello, and welcome back to the channel. I'm Algabot, and on this channel we take apart automated trading strategies and study exactly how they work, line by line. Today we're looking at an expert advisor for MetaTrader 5 called Streak Exhaustion Fade. It's a pure price action, mean reversion system that uses no indicators at all, no moving averages, no oscillators, nothing but raw candle closes. By the end of this video you'll understand how it counts exhausted runs, how it waits for a rejection bar to confirm a turn, and how it places its stops and targets. Let's dig in. So what exactly does Streak Exhaustion Fade do? At its heart, this is a mean reversion strategy. The idea behind mean reversion is that when a market stretches a long way in one direction, it eventually runs out of fresh participants and snaps back toward an average. This expert advisor measures that stretch in the simplest way possible by counting consecutive same-direction closes. When price prints one lower close after another, that's a falling streak. When it prints one higher close after another, that's a rising streak. Each additional close in the same direction recruits the last marginal buyers or sellers, and when that supply runs dry, price tends to reverse. What makes this strategy unusual is that it uses no indicators whatsoever. There are no moving averages, no relative strength index, no stochastic, no volume, nothing but the open, high, low, and close of each candle. Everything you see it do is derived from raw price geometry. That makes it transparent and easy to reason about, which is exactly why it's a great strategy to study. The expert advisor doesn't fade a streak blindly, though. Instead of guessing where a move ends, it waits for the market to show its hand with a rejection bar, the first candle that closes back against the run. Only then does it consider a trade. It also acts just once per closed bar and holds only one position at a time, identified by its own magic number. This strategy can be applied to any symbol and time frame in MetaTrader 5, since it relies purely on candle structure. It's best suited to traders who appreciate clean, rule-based logic and want to understand precisely why every trade is taken. Remember, everything here is for educational purposes only. We're studying mechanics, not making any promises about results. Let's walk through the exact logic, step by step. The expert advisor only acts once per newly closed bar, so it isn't reacting to every tick. It makes a single decision when each candle completes. It also trades just one position at a time. If a trade is already open under its magic number, it simply waits, letting the stop loss and take profit manage the exit. When a fresh bar closes, the strategy first looks backward and counts the run. It walks back through the candles, counting how many consecutive lower closes or higher closes have printed, up to a hard cap of 60 bars. That count is compared against the streak threshold parameter, which defaults to 4. So by default, the market must have closed lower at least 4 times in a row, or higher at least 4 times in a row, before anything can happen. Counting the run is only half the picture. The strategy then examines the most recently closed candle, which it treats as the rejection bar. For a long setup after a falling streak, 3 things must all be true. First, that rejection bar must be bullish. It's close above its open. Second, its close must finish above the close of the run, proving the down move has genuinely turned. And third, the close must park near the high of the bar. This is controlled by the close push parameter, which defaults to 55%. It measures how far up into its own range the candle closed. A close in the top half of the range tells us buyers seized control by the end of the bar. When all of those conditions line up, the expert advisor signals a buy. The mirror image applies for shorts, a rising streak, followed by a bearish rejection bar that closes below the run and parks near its low, signals a sell. Now for risk. The stop loss sits just beyond the structural extreme of the entire run, the lowest low for a long, or the highest high for a short. It's then buffered by the stop buffer parameter, a fraction of the average candle range across the streak, which by default is 25%. That keeps the stop a sensible distance beyond the wick. The take profit is set as a reward-to-risk multiple of that stop distance. With the reward-risk parameter at 1.5, the target sits 1.5 times the risk away from entry. Once the order is placed, the trade is left alone to hit its stop or its target. Let's read the actual MetaQuotes language code on screen, just as you'd see it in MetaEditor. At the top are the input parameters, the dials you can adjust without touching the logic. StreakThreshold, set to 4, is the minimum number of consecutive same-direction closes that counts as an exhausted run. Raise it, and the strategy waits for longer, rarer runs. Lower it, and it becomes more active. Close push, at 55, is the percentage of its own range the rejection bar must close into to prove the turn. A higher value demands a more convincing rejection. Stop buffer, at 25, sets how far beyond the run's extreme the stop sits, as a percentage of the average bar range. Reward risk, at 1.5, is the take-profit distance as a multiple of the risk, and lots is simply the order size. Now the signal logic. The code first calls a helper to count the consecutive lower closes and stores it in downstreak. Then it builds a single Boolean called bullish rejection. Read it like a checklist joined by logical ands. The streak must meet the threshold. The signal close must be above the signal open. The signal close must be above the prior close, and the distance from the close down to the low must be at least the close push fraction of the bar's range. If every clause is true, the EA enters the buy block. Inside that block, it calls extreme and average range to find the run's lowest low and its average range. The entry is taken at the current ask. The stop loss is the extreme low minus the buffer. Risk is simply entry minus stop, and the take profit is entry plus reward risk times that risk. Finally, trade.by sends the order. The sell side is the exact mirror of this. Let's watch the strategy on this illustrative chart. The panel beneath the candles isn't a traditional indicator. It's simply a counter of consecutive closes, the very thing this strategy measures. Negative values mean lower closes are stacking up. Positive values mean higher closes are stacking up. Watch the left side. Price slides lower, candle after candle, and the counter drops step by step until it reaches -4 and enters the green falling exhaustion zone. The run has met the threshold. The next candle is a bullish rejection bar. It dips to a fresh low but closes back up near its high, rejecting the lows. On the following bar, the expert advisor signals a buy, and you can see the buy marker appear. The stop sits just below the lowest low of that run. Price then climbs, and as the rally unfolds, the take profit is reached, marked on the chart where the long closes in profit. Now notice that same rally has become a rising streak. The counter has been climbing with each higher close, and it pushes up to +4 and beyond, into the red rising exhaustion zone. The market is now stretched to the upside. The next candle is a bearish rejection bar. It pokes to a new high, but closes back down near its low, rejecting the highs. On the following bar, the strategy signals a sell, shown by the sell marker, with its stop placed just above the highest high. Price rolls over, falls away, and reaches the short take profit, completing the second trade. One falling run faded long, one rising run faded short, the same logic in both directions. Remember, this is a clean illustration for learning, not a typical real market sequence. And that's Streak Exhaustion Fade from top to bottom. We covered the core idea of fading exhausted runs, how the strategy counts consecutive closes, how it waits for a rejection bar to confirm the turn, how it reads the code in MetaTrader, and how it places its stops and targets. Everything it does comes from raw candle geometry, no indicators at all. A quick and important reminder. This video is educational content only, and nothing here is financial advice. Studying how a strategy works is not the same as recommending you trade it. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment telling me which expert advisor you'd like me to analyze next. You'll find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.